Good afternoon, people. Welcome back to Cruising on Crypto. I am Craig. So this is the channel you should come to if you want to talk more about staking, yield farming, general crypto news and information that might affect the markets, everything like that. So if that's something you're interested in, make sure you subscribe to the channel, hit that bell notification so you don't miss any upcoming videos. So if you saw the last episode I did yesterday, it was my questions on my previous series of staking and yield farming that people had given me very good questions. I appreciate that. It gives me information on what kind of content you guys want. Now that series on yield farming and staking is a bunch of episodes, and I've talked about things like impermanent loss and other risks of yield farming in those episodes, but they're always just a component of a video, which might be halfway through it and whatnot. And I notice when I look at the comments, I'm still getting questions about things like impermanent loss and leverage and all that stuff. So I'm going to do this one episode where I'm going to talk about the three major risks of staking and yield farming, so that whenever anybody has a question about it, I can just point to this hopefully short and concise risks of yield farming episodes, so that covers everything in one episode instead of telling them to go to an episode, which is only a little component of that video is about it. So hopefully that's something you look forward to having. So as you can see from the thumbnail, the biggest risks of yield farming crypto, there are actually three of them. We're going to go through them now. First, we have the use of leverage. Now, leverage doesn't have to have anything to do with staking or yield farming. You can be a leverage trader of just buying, let's say, a Binance coin. And on Binance, they give you the option. So on Binance, let's just say you're trying to buy Binance coins and you have enough money to buy 100 coins, but it gives you the option to leverage buy, so you can get, 300 coins, or maybe 5 times leverage where you get 500 coins. And people will go, oh yeah, the great idea, because I think the coin's going up. But I'm just here to tell you, if we've learned anything from this recent crazy pullback, is that crypto assets are volatile. Now, we've just gone through a 55% pullback in what should be the fourth and most bullish year of this most recent 4-year cycle. This is the year that everything's supposed to shoot higher. And even during this supposed bullish of bull phases, we had a 55% pullback. So this shouldn't be considered completely crazy, although it is bigger than normal. If we look back at the 2017 bull market from 4 years ago, and even the 2013 bull market, there were numerous big pullbacks during that final year, the bullish year of the 4-year cycle. I just want to show you a nice little diagram that somebody created, and that's the look of my face when I wake up and find out everything in my portfolio is down like 25% in one day. I'm sure some of you went through that as well during the crypto crash in, I guess it was the beginning of May. Anyways, this is not completely uncommon. As you can see, we look back here at 2012, 42%. 2012 again, 56%. Now 2013 is that bullish year. Look, even during the bullish year, down 32%, down 35%. And then when it got to the peak, we get into the bear markets, and that's when you get these crazy pullbacks, 82.6%. And then there was another 49% one. And then, although this thing is actually hiding it, there was another one, 86.9% down in 2016. So here we are back into 2017. Again, that fourth year of the bullish phase, we had a 34%, a 33%, a 38%, and a 40%, and a 29%, all during the 2017 bull market. Wow. So this is not completely unexpected to see these kind of pullbacks. Now, 55 is on the bigger side of things, but as we saw in 2013, we had pretty much a 50% pullback during that bull year as well. So keep in mind too, this market of cryptocurrencies is still in its infancy. It's not like the stock market, where if Elon Musk tweets something stupid, the entire stock market doesn't crash. Maybe that affects just Tesla, or maybe it affects just electric car vehicle companies, one component of the stock market, not the entire stock market. It doesn't make banks go down, doesn't make real estate investment trusts go down. You know what I mean? You see what I see? When you have a big market that's very mature and lots of big players are in there, then you don't get that huge volatility. You don't get markets falling 25, 30% in a day. So you got to keep in mind, cryptocurrency and the market in general is way more volatile than the stock market. So talking about how you can easily lose all your money. Like I said at the top, the fastest way to lose all your money is to invest in leverage. And not only in an individual stock, but you can also leverage in yield farms. On alpha, for example, I showed you that in a previous episode. I did one time do a 1.5 times leverage on a liquidity pair, and I got out pretty quickly after that because some of the interest rates they were charging for the tokens that I was borrowing went from 12% when I first got in up to about 45% without any rhyme or reason. So I was like, I'm not playing that game, and I got out. But just showing you with leverage, with 3 times leverage, if the market or the coin you're leveraging falls by 33%, you will be forced liquidated by the exchange or by the yield farm because they can only allow you to leverage as long as you still have some skin in the game. So if you drop by 33%, your 1/3 is gone. They liquidate, they pay back those people that loaned you the coins. Everybody's happy except for you because you got 0. Same thing, you can go 5 times leverage on Binance, some of these other ones. You can go 5. I've even seen 10 times. At 5 times, the market only needs to drop 20%. And as we know, unless you're glued to your screen, if you walk away from your computer on any given day or you go on vacation for a weekend or a week, you could come back and find out there's been more than one 20% move up and down in the cryptocurrency market. That would not be even the slightest bit unusual. And then if you use 10 times, it's just insanity. If you're going 10 times, you're playing Russian roulette. The market only needs to fall 10%, which could happen on any given day, and you are liquidated to 0. So again, I consider leverage to be like playing Russian roulette. You keep winning until you die. And that's pretty much what I consider leveraged investing to be the number one problem when people see the opportunity to yield farm and they see those juicy rates of return. They think, well, yeah, but if I only have $1,000, but if I could leverage, I could have $5,000, and then I get those juicy returns times 5 instead of just times 1, which is what I have. Yeah, don't do it. Just don't. You'll make enough money in cryptocurrency just holding what you can afford to invest, and you should never invest more than you can afford to lose. So any money you put in the cryptocurrency market is, let's face it, it's aggressive investments at the very least. So keep that in mind. So the next big thing, and I've mentioned this in numerous episodes, is impermanent loss. And I'd say it's the risk that no one really talks about, mostly because it can be hidden by the yield you get on these yield farms. So if you're making 50% yield, but you're getting this impermanent loss, and we'll show you some examples in a second. If the loss is less than what you made in yield, you might not even notice that you've been getting impermanent loss on your liquidity pool tokens. And I'll show you the example of how it works. So this is just a simple basic example where we're not talking about the yield you're getting, you're just talking about the coins. So in this example, somebody created this and I just took it off of Google Images, but they're using BUSD and BNB as the liquidity pair. You have to link 2 coins together to farm. And what happens is you have to have the same dollar value of each coin. And then while it's in the liquidity pool, it's constantly being rejiggered to make sure that both coins equal each other. So in this example, you've got $500 of a stable coin called BUSD, Binance's US dollar coins, linked to the US dollar, never changes in value. Then you've got Binance's coin. In this example, you needed 12.5 Binance coins because the coins were worth at that time $40. So that's $500 worth, and this is $500 worth. So the total investment is $1,000. And let's just say, because they're not showing the interest you would be earning, let's just say in a very short period of time, let's say maybe even the next day, Binance jumps up to $45. Well, what would happen without you even being aware of it? And that's why I say it's the risk that no one explains or talks about very well. You now don't have 12.5 Binance coins. You now have 11.11 Binance coins. Sure, you have more BUSD because what they've done is to equal these out to be the same value. They've subtracted your BNB coins and added more BUSD coins. So of course you've still made money because Binance has gone up and BUSD has stayed stable. So you've gone from $1,000 investment to $1,059 investment. Again, if you're just looking at the total value of your portfolio, you would think, yeah, I'm making money, well, I'm happy. What you don't realize is there's been impermanent loss. If you had just kept the 2 coins separately in your wallet, your portfolio would have been $1,062.50. So you've lost whatever, $3. It's not a lot, but it's still something to mention. $3 because you would have made more money not yield farming. So there you go. That is what impermanent loss is. Now the interest rate you get usually offsets it too. So we've talked about that, but let me just show you a real world example. So I went to Auto Farm, which is one that takes your liquidity pool tokens, the reward tokens you get on the farm, get sold automatically without you having to do anything, and buys more liquidity pool tokens. So let's just go through how that works. I used the same example as that previous slide of BNB with BUSD. Right now on MDEX, which is a yield farm, they're paying 27.77% for you bringing those two coins together and creating liquidity on their site. Auto Farm auto compounds it 365 times, so once a day. They reinvest your MDEX coins, which you were going to get as reward. And they reinvest it so that now your 27.77% is now working out to be a 30.75% rate of return because of the auto reinvesting. And then auto, because you are using Auto Farm, they are collecting fees. As you can see here, it's about 3.5% for using their service, but they're also paying you extra 12.72% by using them as your Auto Farm. So the total is 43.47%. So as you can see, if you're making that extra rate of return, you might not even notice the whole thing about impermanent loss, but that's because we're using the example of Binance going from $40 a share to $40 a coin to $45 a coin. What happens if it's gone from $40 to $35 and then to $30 and then to $25, like we've recently seen in this latest market pullback? Now you will notice the impermanent loss, because two coins, especially if you have one stable coin with a growth coin, you're guaranteed to have impermanent loss. As they showed you in this one, BUSD is never going to change in value. It's going to be worth $1 the whole time. If Binance starts falling, what's going to happen is they're going to sell BUSD to buy you more Binance coins so that they equal out to be the same dollar value. So you're going to be losing dollars through impermanent loss, plus losing value because BNB is going down. So it's kind of like a double whammy. Now, impermanent loss is generally fairly small in size, but we'll talk about another time when impermanent loss can become huge. So here's where I want to show you a couple of services, one I've been using for a while and one I just learned about today. The one I've been using for a while is called Yield Watch. So as you can see from down here, these are all the farms that they can track for you. So if you farm on any of these sites, and I use MDEX, I have used ApeSwap, I use Pancake, obviously I use Auto Farm, and I've used Alpha. So there's other ones on here. If you use them, then this site will still track it for you. They add new ones slowly over time. I don't know why they don't add every single one. I guess it's a lot of work to code it, but there's a lot more that hasn't been added here. But here's an example of one I've actually pulled from my actual farming. I'm farming Cardano, ADA, with Binance. It's presently paying 40.29% APY for me to use Auto Farm to do it. Now, this is what you'll see on Yield Watch when you hit this little binocular symbol and you've got your proper crypto wallet linked up. It'll show you a whole screen of these boxes showing you what you've done. If you hit this little eye right here, you can get more information. And that looks like this. So you've hit this eye, this pops up, and it shows you what you invested originally and what you've earned. As you can see, you've earned some trading fees. I've earned some LP token fees. There's some pending rewards coming. Long and short, you look here, and impermanent loss they show as 0. Now that's only because, kind of dumb luck, I have Cardano and I have Binance that are moving pretty close to equally. Now there has been a slight, as you can see from this minus 0.017, I've lost a little bit of Binance, but it's such a small amount that I guess in the general scheme of things, I haven't really had a lot of impermanent loss. It hasn't really noticed it much, although there is a little bit. So this site shows you this. There's no charts, there's no graphs, there's no nothing like that, but you do get to find out that sort of stuff. This is the second one I just heard about today, and I went online and it does the exact same thing. I hook up my wallet, it shows me my ADA BNB pair, it shows me what I put in, what the value is, what the rewards are still pending, and it shows me a graph of both of the ADA coin and the BNB coin. But I wanted to show you this. If you click on the little eye, you get this thing showing you your exact impermanent loss. So it shows I deposited this much ADA and currently how much ADA I have. So I've actually gotten 52.46 extra ADA coins worth $77. But I've actually lost a few BNB coins worth $77. So the net effect is I've lost 54 cents to impermanent loss. And that's why on Yield Watch, it considered that zero. When you've got a $14,000 investment and you've lost 54 cents in impermanent loss, it's not even worth talking about. But there you go. You need to link together two coins that will probably both grow around the same rate. If you have a stable coin and a growth coin, you're guaranteed to have impermanent loss, because if things go well, this is going to take off to the moon and this is going to be left at the train station. And what's going to happen is as this moves up, they'll subtract some of these coins to add more to these coins, and they'll keep doing that as this keeps moving up. And at the end, when you finally cash out, you might say, well, I put 100 BNB coins in, I should still get 100 BNB coins out, right, at the end? Or more if you've got the interest reinvesting it. And you might not. You might end up with like 80 BNB coins, but a whole crap ton of the stable coin. So keep that in mind. That's impermanent loss. The third and final thing that is kind of a big risk is chasing yield. Now, I've just done a screen grab here of CoinMarketCap. That's where I go a lot to go research what's good, what's bad about a coin I'm thinking of investing in, and we'll get into another screen in a second. But as you can see, I just kind of went down and said in the filter, give me things that are around $1 million market cap. So these are all the small coins, and you can see that's around 1,648 on the list down, and it goes down. If this was a real website, I could scroll down, but this is a screen grab. But as you can see, a lot of really small coins with really jagged graphs, which means they don't have a lot of liquidity. There's not a lot of people buying or selling these coins. So the price jumps a lot when somebody comes in and actually buys or sells a decent number of coins. Very risky. So if you go to a yield farm, like even Pancake, which is the biggest AMM on Binance Smart Chain, you get on there and they'll be saying, oh, new coin just coming out today, yield farm with us and we'll give you, and they'll throw some crazy interest rate out there. Like you're going to get 4,000% interest. What they're meaning is you're going to get 4,000% because this brand new coin is so desperate to get people to start adding liquidity to their coin that they've promised PancakeSwap or whoever you're dealing with a ton of their coins if somebody was to yield farm with them. Therefore, that's why the rate of return looks huge. That usually only goes on for a short amount of time if it's a good project, an actual coin that's going to last. So you chase that percent, that's that 4,000%, and then it doesn't stay like that for very long. It might only be a week, might only be 2 weeks, and I'll show you that in a second. But the bigger risk is chasing yield going after a, pardon my French, shitcoin. That's what they call it. If you get into a shitcoin, which means a coin that has absolutely no reason for existing, it's got nothing going on of any substance, and you tried to buy it and then yield farm it because of high rates, you chase those rates. The problem is here's a prime example, a coin that is got no reason to be here, and you yield farm it, and that thing could end up going to zero. Maybe not during 2021 during the bull market, but in 2022, 2023, when we're in a bear market and people are dropping their coins like hot potatoes, even the good coins are going down in value. The crap coins are going to go to zero. So keep that in mind. You're really taking a risk. So what happens, I went on to CoinMarketCap and I was going to put Shiba Inu as my example. But then I had to laugh because when I typed in Shiba, I found out there's a whole pile of coins that are piggybacking on a coin that was already piggybacking. If you're not aware, Dogecoin was kind of the joke meme coin that Elon Musk made popular. And then Shiba Inu came out, which is really, they just almost jokingly said, oh, it's a cute dog coin just like Dogecoin. So, and it took off too. Because people were like, well, if Dogecoin can go up, Shiba Inu, which was like 1/4 of 1 penny each or something, was so cheap that people who only have small amount of money said, well, if I can't afford to get into Doge in any big way, I could buy like 100,000 coins of Shiba Inu. So it also went up. Now it's coming back to earth again. But then when you get onto CoinMarketCap, you find out other people are trying to piggyback on the exact same thing. This one's called Shiba BSC, which is Shiba Binance Smart Chain. So you go to CoinMarketCap, you punch this little thing here, which brings you to their website. Now, anybody can create a website. That doesn't mean anything. Another thing I found suspicious is there's no white paper listed here. A white paper is almost like the architecture of the coin, the business plan, the reason for being, the tokenomics, all this stuff is in the white paper. This one doesn't even show a white paper. Almost every major coin I've ever looked at CoinMarketCap has a button here for reading the white paper. This one doesn't. Big red flag. Another big red flag is look at how many coins you could get for even $10. This is what one 10 millionth of a cent or something. This is just a joke coin in my mind. And look at its whole lifespan. This is the all chart. It's done nothing since it started in its existence but go down. So this is my prime example. Didn't mean to pick this coin, but it just was so glaringly obvious. So I click on the website just to see what it's all about. And let's just check out what Shiba BSC is all about. Right here, I've highlighted it. That it says it's a meme token. It's not even trying to pretend it has a purpose. It's a meme token right in their own website. And it's a decentralized community experiment. And what they're going to do is they're going to charge 6% fees per transaction and take those fees and burn coins. That's the only thing they're doing. Their whole claim to fame is when people buy our coins, there's going to be a fee, but if you hold your coin, we'll pay you the fee and we'll burn back coins. So if you hold our crap coin, it'll go up in value because we're burning coins. That's the only claim to fame. There's no smart contract. There's no changing the world for better. There's no smart payment system. There's nothing of value with a coin like this. So what I'm getting at, the whole point is you can find yields on these crap coins that are out of this world. And if you chase those rates of return, talking about impermanent loss again, if you have Binance coin with Shiba BSC, and this thing goes from, it's hard to even, let's just pretend it's $1. I can't even read off how small it is. It's $1, and this is worth $40. So you bought 40 times this for one of these. And then this goes to 75 cents, then to 50 cents, then to 25 cents. The whole time your valuable Binance coins are getting slowly sold off to buy more of this crap coin so that they can equal in value. And as this eventually goes to zero, and this is sold off constantly till this is also zero. So your whole investment goes to zero if the crap coin that's hooked up to your good coin goes to zero. Then both of your coins' value are zero. So this is why I say don't chase yields. Another thing I wanted to mention is if you see super high yields, and these are some examples from my website where I've researched a project and found out, it's a crazy interest rate, high, but there's a reason. It's a brand new AMM or whatever, and for the first 2 weeks, they're giving away a ton of their coins as a reward for being an early investor. But whenever you see this kind of rate of return, 1,636% or 33,840%, I've researched it. I've been happy with the project. There's a real use case. There's a profitable market plan there, and I'm sure this coin can last. So I'm willing to take the risk to be an early investor. But just don't count on it staying like that. This one went from 1,600 to 699, and it may most likely fall even further than that. This one from 33,840 to 6,990. It probably will still keep falling as this company gets more and more mature and they stop giving out coins in such large volumes. The only one that's gone up actually is because I'm yield farming my banana BNB on Ape Rocket. I know, stupid name, but that's what it is. Their reward coin is called Space. So because I'm yield farming here, I'm actually getting part of this rate of return is I get Space coins. And then I auto put that into a Space only pool on this. And this one said, the rate of return is going to be equal to our fees. We're going to take our fees and we're going to pay the people that have Space tokens in this Space pool. When I first got on this pool, I was making 63.41%. I had to put it somewhere. I was getting all the Space coins given to me and I didn't know what to do with them. So I said, might as well get 63% for the Space tokens since I'm getting them for free anyway. And over time, I guess because their fees have been so good, over time, my yield keeps going up, and now it's at 309.55%. So I keep taking my Space tokens from this farm and putting them over in this pool and making even more money. So it's been very lucrative. But that's what I'm trying to get at here is you will see some crazy, crazy rates of return. But then again, you got to go on CoinMarketCap here, find the coin, read the website, read the white paper, make sure in your mind there's a use case. It's not a meme coin or a joke coin. And then if you feel confident, then it's worth getting this kind of rate of return to be an early adopter. This is where you've got to watch what these coins are coming out. Maybe I find it on PancakeSwap or something where a brand new coin is coming out and they'll have a link to the website. The website will explain what it's all about. Again, you have to research it to see, is this going to be a profitable business? And if so, do I want to invest in this coin and take those amazing rates of return? But even the more stable, well-known coins like Cardano, BNB, when I started, it was 68.54%. It's now dropped to 40%. Zilliqa was 345%. Now it's 78%. As you can see, most of these coins have dropped. This is my DFD, which is a stable coin maker with a stable coin. That's the only stable coin farm I used. 1,575%, it's dropped to 717. So all I'm saying is don't assume when you lock into a farm at a rate, that rate is guaranteed the whole time you're in there. It'll change. It'll go up sometimes. It'll go down sometimes. If it's a new coin, you can almost guarantee it's going to go down, not up. The other thing you got to keep in mind too is when you put in coins, let's say you knew you put in 100 of this coin and 500 of this coin to make it equal. Don't assume those same number of coins are going to come back out on when you liquidate it at the end. It's going to be some different number. Most likely, impermanent loss will not offset your interest rate you're making. But if the market's going down, you're going to get less coins out than you started with. And that's a combination of impermanent loss and, well, mostly impermanent loss and the fact that the value of the coins have fallen. So there you go. Those are the three main risks that I see in yield farming or staking. This can go for staking as well. In case you're not aware, staking is usually like a pool where you only have the one coin and you're getting paid for just having that one coin. If there's only one coin, there's no such thing as impermanent loss. So if I stake cake on Pancake, I'll get more cake coins. There's no, oh, we're subtracting this coin to give you this. No, there's only one coin, so you don't have impermanent loss. Yield farming is where you take two coins and you link them, and then you get what's called a liquidity pool token, which is really a token that tells you you have ownership of that two coin combo in a liquidity pool, in case you're wondering what that LP stands for. So we've got the leverage trading. Doesn't matter if you're staking, just trading regular coins or farming. If you take that opportunity to go leveraged, you're playing a game of Russian roulette in my mind. If it's a tiny leverage, like I did 1.5 times, it's obviously less risky. If you start going 3 times, 5 times, 10 times, yeah, you might win the first couple of times you try that and think this is a great idea, but you keep trying it. It's like spinning the revolver, playing Russian roulette. At some point, that bullet's coming out and you're going to lose everything. So don't do it. Second one, permanent loss. Talked about it. This episode will be the one I point to whenever anybody tries to ask me about impermanent loss. And of course, the almighty chase the highest yield farm and try and go for that, thinking that's always going to win you the most of returns. Only if the coin is of substantial quality would I ever chase a high yield. Usually, if it's too good to be true, if it seems too good to be true, it is. So take a little word of warning there. P.S. In the last episode, I did mention that I was going through, it was my question respond to comment episode, and I said, I think I must have bots in my comments because they were good questions. I had highlighted them to read out. And then when I started scrolling down the page, I started going, wait a second, this is exactly the same wording question, one page down by a different person, but the end part of that comment was a totally different thought. And I responded to that thought. And Jill, one of the viewers, commented back saying, I was one of those comments and I appreciate you answering my question on your episode, but I didn't write that first part, the part that you were saying, hey, that's a duplicate, maybe it's a bot, I don't know what's going on. She said, I never wrote that. In fact, I went back on the episode, looked at the comments, and my comment is still the same comment I wrote without that first part. Here's what happened. Thanks to Jill for figuring this out and then sleuthing the mystery out of it. I had used a program to highlight the questions I wanted to talk about as I scrolled by. All I can figure has happened is whenever I highlighted a question I wanted to talk about, as I scrolled down the page, that software took that question and reinserted it on another person's comment in front of their existing comment. So that's what I was scratching my head going, these are good questions. Why would a bot from different people showing up with the same question, but that's a good question, and it's not a bot. It was that silly highlighting software I was using that was creating additional comments. So there you go. Problem solved. I do not have bots that are very, very intelligent asking smart questions. I have real viewers. So hopefully you found this informative or entertaining. If so, show the channel some love by giving it a thumbs up. Subscribe if you haven't already. Hit that bell notification so you know as soon as I come out with an episode, mostly because I read all my comments right after I put up the episode. I'm there to read any comments that come in and also keep out the scammer comments. If you see any people scamming with, oh, this guy, send him your Telegram, contact him, I always get rid of them as soon as I can see them, and they almost always happen soon after the episode. So I'm in the comments right after. So as soon as it's up, if you want to comment right away, I'll probably be reading it. I get around to reading all the comments at some point, but the day I send it out is the day I'm almost live watching the comments come in to respond to the good ones and get rid of the scammers. So there you go. So that's it. So until next time, this is Craig signing off, wishing you happiness, health, and wealth in that order. Ciao for now.